Hey everybody, it's RC Peck, the founder of Fearless Wealth and the creator of the Fearless Wealth portfolio, and this is my market situation report for Saturday, March 9th. I hope you all are doing well. And lots going on this past week, the biggest one being the price tag of new lifetime highs for the Dow Jones. If you haven't heard, it's cost about $8 trillion. That's what the U.S. paid. They actually have paid more. But if you just look at the cash accounting, the U.S. has spent about $8 trillion to get the Dow Jones up to new lifetime highs. And I get that number from the deficit spending over the last 4 months and the money printing over the, I said 4 months. It's probably going to be 4 months in the future, over the last 4 years, and the money printing over the last 4 years. So that leads to about $8 trillion to get the Dow Jones at lifetime highs. And so what I want to talk about this week is safe acceleration. What I've heard from a lot of people is, yeah, the Dow Jones is hitting lifetime highs, but is it real? Is this manufactured? Is this something that we can get behind? Should we go in? Is it safe to get back in the waters? Is it safe to get into the market? And I think the answer is it depends where you look. And so what I want to talk to you about is where you might want to be looking. Now, here at Fearless Wealth, what we do is we let our strategies look for us, and we have 4 distinct strategies, and we diversify into strategies. While most people would diversify into stocks, we pick the strategies that I designed in the 90s, and we diversify into those, and those adapt to any sort of manipulation, change, intervention that's going on. But for those that are not invested in different strategies, what I want to show you is some areas where you can safely get into the market. So if things do turn against us and this manufactured new lifetime high is not for real, then these would be the places you'd want to look. So I want to do that by going into my site, specifically using Market X-Ray, a tool that I designed, spent years making this seem very simple, very clean, so you could immediately know where things are, where things are not, where you should put your money, where you should avoid your money, and where the deepest value is. So with that, let me jump over to Market X-Ray and we can look at that. So here's Market X-Ray, and the first thing I want to do is just look at the Index X-Ray. I'll keep that off the screen. Look at the Index X-Ray here, and we've got NASDAQ, small cap, mid cap, and large cap from top to bottom. And you can see the one I just want to focus in on is large cap here. You can see that mid cap and small cap are now pulling back against the market, but they have been beating the market, and the market is the overall market. But what I want to look at is how large cap right now looks like it's accelerating forward. So this is the minimum and that's the maximum, and what we're doing is we're taking a large cap index and we're dividing it by the whole market to see if that's moving faster or slower, relatively speaking. And we're in the typical range now for it, but as you can see, large cap is moving faster. So with that, I want to kind of pop in and look at the historic data and see what large cap is doing in regards to the market. So if you look at the screen here, you can see that large cap really have been underperforming the market since the end of 2011. It's been falling, went up a little bit, been falling again. And to me, when I look at this here, beginning of 2013, it looks like something has changed. It looks like the direction has changed me over the last 2.5 months. And so I think if you want to get into the market, a safer way to get into the market while still being able to accelerate your wealth, your net worth, is to look at those larger cap stocks that have those dividends, and ones that may have been out of favor for a while, maybe even the last 5 or 10 years. Those large cap stocks are the ones that you're going to want to get into. But as far as an index goes, you want to be looking at the large cap in case this market does move against us. You'll have the best protection on the downside with large cap. Now with that, what I want to do is move down to Sector X-Ray and look at all the sectors. Now we have about 18 sectors on here. And what I want to do is I want to skip the ones that are absolutely crushing the market, like retail is doing really well, REITs are doing well, healthcare is about to break out of the typical, but you see you have pharmaceutical lagging behind the market. You have precious metals not only lagging behind, but moving in the wrong direction. Financials are lagging behind the market, and telecom is lagging behind the market. And then, so what I want to do is let's just look at a couple of these and see what we can pull for them. So let's just go into telecom, zoom into here. Again, this is a way to get into the market, and if the market does turn against us, the stocks that have been going up the slowest will get least hurt. It's going to be the retail and the REITs and the ones that have really screamed ahead where there's going to be the biggest correction. So this is the telecom sector compared to the overall stock market. And you can see that it's been going up since probably the end of July of last year. And it just finished a correction here, which I like. Let me just zoom in and do a 1 year. It just finished a nice correction here, and it looks like it's going back up. So I like telecom. Now we have a couple telecom stocks in our obvious trend portfolio, but the overall sector looks really great too. So telecom is one of those ways that you can get into the market without a lot of pain. And I do want to look at precious metals here. Now this is this is going to be a scary looking chart for some people if you're just getting in or you're just trading this. But we have a strategy called long-term economic cycles that tells you exactly how to manage your precious metal positions. But as you can see, this is really low. If I zoom out, if I did a max zoom on this, which takes a second to do, you can see that since 2000 right here, it's been slowly moving up, and we've had this correction right here since 2011. So we're in a correction here, and it's hard to tell from this price chart, but this low right here is not as low as the 2008 low. And I have to say something about precious metals. There are almost no more sellers left in precious metals. Almost everybody hates precious metal mining stocks. And when there's no sellers left, all you have left are buyers. So that's the second sector. And then lastly, I'm going to skip over the commodity X-ray. I'm going to skip over gold, metal, oil X-ray. I'm going to skip over the rates X-ray. We'll come to those at another time. I just want to jump down to the global X-ray and specifically just point out a couple countries that I think are doing better than the U.S., but they've been underperforming before. So the first one is Japan. Japan has greatly underperformed the U.S. and, in fact, most other countries for the last 10 years. But things have changed. Things changed in October of last year, which wasn't that long ago, about 5 months ago, and Japan is moving up. Now, prior to that, it had been moving down for about 22 years, but it's moving up now. So if anyone is wanting to get into money outside the U.S., Japan is a great market to look at. And again, what you're seeing here is this price goes up. That means the Japanese stock market is moving up faster than the U.S. stock market. So the last global X-ray I want to look at is the Australian-U.S. X-ray. And so let me click on that. And a lot of people have been saying, got to get into Australia, got to get into Australia. But they've been saying it, over the last 2 years. And this is a 2-year view of the Australian stock market versus the U.S. stock market. And you can tell you would not have been wanted, you did not want to be in the Australian stock market over the last 2 years because the U.S. stock market was actually growing faster than the Australian one. But in September of last year, things changed. And let me just zoom into a 1-year chart. You can see right here that things changed September 13th, bottomed out. Australia started moving faster up than the U.S. So if you're looking to have some money invested outside the U.S. market, then Japan and Australia are 2 places to look. But again, you want to invest in strategies and have the strategies determine what to invest in. And that's what we do at Fearless Wealth. I hope you appreciated the market X-ray this week. Let me go back to my presentation here. And this coming Tuesday is our monthly strategy gathering where we're going to look at the market, stocks, bonds, commodities, currencies, real estate. I'm going to bring up a conversation I had with everyone about, I'm going to say 9 months ago, talking to them about where to get a safe 10% on your money outside of the stock market, bond market, commodity market, currency market, real estate market. It's a completely new thing. I love it. I have a lot of my private clients in it, and I want you to know about it too. A 10% non-volatile return on your money seems almost too good to be true, but we're going to talk about it. Then, of course, speed investing, live Q&A. Anything you want to ask me, ask it live. Update the strategies, any shifts or changes in the strategies. And then, of course, we'll do some more market X-ray. Thanks, everyone, for being here. Have a great rest of the weekend. I'm so glad you're here. I will speak to you soon.